And for the ninth consecutive session, the rupee extended its decline against the dollar to hit a new record low of 85.81 against the dollar. The currency marginally recovered from a fresh low on Friday to finish at 85.53 per dollar. The rupee saw its biggest single-day decline since June 4th on robust month-end demand for dollars. With the latest fall, the currency broke through the psychologically key level of 85.50 for the first time. The RBI helped with the rupee's comeback by stepping in towards the end of the session. The rupee has lost 3% of its value versus the dollar so far this year. The currency is set for an annual loss for the seventh year running. The rupee is set for its worst monthly performance in 2 years. The currency's fall of almost 0.3% for the week was its eighth straight weekly decline. The dollar's broad surge has been the reason for the rupee's repeated record lows rather than domestic-driven factors. The currencies on the other side of the dollar exchange rates have all taken a beating. The RBI has vigorously stepped in to limit any extreme moves in the rupee. Some have criticized the central bank's intervention, while others have lauded the RBI's moves. The criticism comes as the RBI has dug into its forced reserves to bail out the currency. India's forced reserves have fallen sharply by over $60 billion since hitting an all-time high of $705 billion at the end of September. And to discuss more, we are now being joined by Amit Babari. He is the founder and MD of CR Forex. He is joining us live on the broadcast from Mumbai. Thank you so much for taking out your time and joining us.
Pleasure is mine.
Let me begin by asking you, in your perspective, why is the rupee falling to new lows in recent weeks?
Yeah, let me answer that question into two parts. From 83 to 84, it took 14 months for rupee to move between 83 to 84, and from 84 and 85 and a half, it took just 1.5, 2 months. The first part, 84 to 85 momentum came because of dollar strength, FII selling in Indian equity market, emerging market currencies getting weaker, and our trade deficit data came on a negative side. Last 50 paisa move came, the entire primary reason for the same was in October 2024 data point RBI monthly bulletin. They have mentioned that between 1 month and 3 months, they have an outstanding forward contract on the sell side close to $21 billion. This might have extended close to 45 or 50 billion dollars. Probably on last Friday, they might have not rolled over the entire forward, because of which the initially 2 hours of the trade we have seen some pressure in the dollar rupee pair, and they have moved higher towards 85, 80 kind of level.
All right. Now, considering that and looking at the decline as of now, what is your outlook for the rupee for next year?
In the first part of the year, there can be some pressure in dollar rupee because dollar index is still moving higher. FII might continue to sell in some initial months, but at the later part of the year, we feel that dollar rally might not go well and dollar index might correct towards 105 kind of levels. There are primarily 2 reasons for the same. First reason, the biggest problem in US today is the rising debt, and the interest payment what they are paying on the debt is close to 25% of their entire year revenue. If they have to make their deficit lower, one of the ways to do that is to go and cut rates aggressively in the coming year. If that happens, then dollar index strength might get reduced. Second reason, from the history we have understood that dollar Trump strategy is, before the election, the strategy is to go and tell that they are going to impose tariffs, but he has not drastically put tariff in his last tenure, because of which, if you see, dollar index was at 101.5 when he joined, and after 1 year, dollar index got weaker, close to 88.5 kind of a level. So dollar had fallen by 10% in his first year of administration last time. Because of all of this reason, we feel that in the second part of the year, rupee might get stronger. So broadly, the range can be 84.5 to 86.5.
Right. And considering your projection as of now, how do you rate the RBI's move in balancing the risks for the rupee?
If I have to rate RBI, I will say I will give them 7.5. To give you a data point, in the month of September end, dollar index was close to 99.5 kind of a level. Right now, dollar index is trading around 108 kind of a level. So we have seen that dollar have got strengthened by 8% and rupee have got weaker by 1.5%, 2%. So it shows that they have managed the volatility in a great manner. I would have given them 10 on 10 if during the period between 2023 to 24, when dollar index was coming down, flows were coming in the Indian equity market. If they have allowed rupee to appreciate at that point of time, then we would not have seen such a sharp level currently. As they have not allowed rupee to appreciate, currently the biggest problem is that only RBI is the seller in the market. No one else wants to sell in the market. Mainly exporter or trader do not want to sell because they know the trend is on the weaker side only.
Absolutely. Of course, we'll have to wait and see how that goes. But thank you so much for joining us on the show and giving us your perspective. And that was Amit Babadi. He is founder and MD of CR Forex, joining us live on the broadcast from Mumbai.